Welcome to our weekly Forex Forecast. And today we are going to be preparing for the week of trading for the week of June 24th to 28th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially right now, because there is a lot of volatility in the market due to all kinds of stuff that's going on. So just be mindful of that. And we always want to make sure we protect our capital. So let's dive into our analysis. As usual, we'll start off by taking a look at our economic calendar. So before we dive in here, let's have a quick look at what happened last week. So some of the big things that we saw come out. One, ECB, Draghi was not so positive. He was kind of dovish. So that drove the euro down. But we also saw the Fed was very dovish as well. So now the market is pricing in 100% chance of interest rate cut in July. I don't know if that will happen, but for now, the market is aggressively pricing in interest rate cuts. So Fed essentially came out and opened the door for interest rate cuts, and that's a huge monetary policy shift for the Fed. So we are definitely expecting interest rate cuts this year, but whether we see them in July or not, we'll have to see. But this is what market is pricing in. And as a result of that, we saw a US dollar drop, and the equity markets are doing really well right now because of that. They're looking for that injection of money and liquidity into the markets. So it's good for stock markets, not so good for the US dollar. And then we also had Australia here. They were not that bullish on their policy either. And Bank of Japan did not cut their policy, just kept everything the same. And now another thing that came out was that data for US was not positive, and that basically drove the US dollar down. And one more thing was that we saw that US and China are going to meet at the end of the month in Japan to basically pick up the negotiations once again. That is also good for equity markets, because if the trade relations, if they do reach an agreement, it will be good for the equity markets. And that's why we saw equity markets go up, and we saw yen crosses go up with that as well. So now market is a little bit more into taking risks. So that's what happened. Now let's dive into what's coming up this week. So with that in mind, and then US, Iran, we have they almost escalated into a war, but then the strikes were called off by President Trump. And as a result of that, right now, US has actually, so Iran shot down a US drone, and US was going to retaliate, but then decided not to, got basically called off the strikes. And that's the reason it's right now it's okay. But if that situation escalates, that could be, it will have an impact on the markets. For now, US has put more sanctions on Iran. So that's where we are in regards to the outside stuff going on. So today, so this week we have RBA Governor Lau speaking today. So that could have an impact on Australian dollar. They have not, like central bank has not been bullish for Australia. They're not. Governor Lau did say that they're not really looking to do tons of interest rate cuts for now. So that was a little bit positive, and we did see Australian dollar react positively to that. But overall, central bank, Reserve Bank of Australia is not that, bullish at this moment. Coming up on Monday, we have trade balance numbers for New Zealand. We also have German IFO business climate numbers. On Tuesday, and the monetary policy meeting minutes. But Japan, they didn't change anything. They kind of essentially stayed neutral. So it should not have a ton of impact. On Tuesday, though, we do have OPEC meetings. coming up. So it could have an impact on price of oil, because anytime there are these meetings, there are always reporters looking for comments, and those comments can drive the market. So oil prices, and look for Canadian dollar to be impacted as well. Right now, the Canadian dollar is doing really well based on one, lack of US dollar strength, and then also some of the data has been coming out positive, plus the oil had gone up. So all of those things were positive for Canadian dollar. Consumer confidence number here, if the data continues to come out negative for the US, that could basically, it just shows the market that Fed will be looking to do the interest rate cuts. So that will be negative for the US dollar. And then we have Fed Chair Powell speaking again. We did hear from a couple other FOMC members last week, especially on Friday there, and they essentially, I think it was Bullard here who actually voted to have interest rate cuts sooner rather than later, and that all of that is negative for the US dollar. So if we hear more of the same, it will have a negative impact on US dollar. And then we have Reserve Bank of New Zealand. They have already cut rate once. We're not looking for interest rate cut at this point. But if the commentary still stays dovish, then essentially it's negative for New Zealand dollar, unless they come out and say we're not going to do any more interest rate cuts. Then that could basically give a New Zealand dollar a positive sentiment. And then on Wednesday, we have inflation report hearings here. Inflation has actually been coming out good for UK, and if it continues to be good, it will be positive for the British pound. But if it starts to drop off, it will have a negative impact on the pound. And of course, core durable goods orders here for US. So a bunch of US data coming out on Wednesday. Like I said, the data hasn't been all that great. The more negative data that piles up, the more the expectation that Fed is going to cut rates. And then we have business confidence number here for New Zealand dollar. If it comes out negative, it will have a negative impact on New Zealand dollar. And then, of course, the final GDP number here for the US. Going into the weekend here, though, this is where we really need to pay special attention, because we have G20 meetings coming up. So this is where we have to watch out for comments from US and China, and see how the trade negotiations go. So both US and China are sending out their delegates to start the talks before President Trump and Chinese President meet. But it will really be based on how talks go between the leaders that will really have an impact. The delegates really, they're just there to kind of talk about the points, but it would really be the two presidents that will have the biggest impact here. So far, U.S. and China have not been able to come to an agreement, and basically it's been back and forth between the two countries. If they come out with a positive message saying that we are making an improvement and we are working towards a solution and we're getting closer to a solution, all that or all of those kind of comments will be positive for the equity markets and could push the equity markets higher, which means Japanese yen is likely to drop, and that means yen crosses can go up. So that's what we have in terms of our fundamentals here. And then, of course, we have current account, which is our trade balance numbers for pound here. These numbers are very important, especially right now where everything is, volatile and everybody's worried about trade. These numbers are very important because they tell us the difference between exports and imports. We saw that the number dropped for the US last week, and this is another reason US dollar got hit. So if a pound has similar scenario, or UK has similar scenario, British pound will be negatively impacted. And then we have GDP numbers for Canada here. And of course, going into our G20 meetings, as well as PMI numbers for China. So Chinese numbers usually impact Australia and New Zealand. So another thing to note here, if we get positive comments out of the trade negotiations, it will also have a positive impact on Australian dollar, New Zealand dollar, because they are big trade partners with China. So any positive news to do with China in regards of data and economic strength will have a positive impact on Australian dollar and New Zealand dollar as well. All right, so that's what we have coming up. Now let's go to the charts here. Okay, so we'll start off with euro dollar. We saw euro dollar go up quite a bit last time, a big, huge push to the upside here, as we can see. And a lot of that had to do with the negative stuff that we heard about the US dollar. So right now it is making this turn here. So we did have this downward move here, but now that's starting to shift. So price had been trading in this range for quite some time, and now it's starting to break out of that range. So this looks bullish for our euro dollar. And as such, I will look for price to move higher here as long as it stays above here. Now, we have to keep in mind that right now, there's a lot of other stuff, external factors that are impacting the price. This is not just about technicals at this point. The comments that come out, the tweets we have to pay attention to. So all this stuff will have a major impact on our trading. So we really need to keep an eye on news that's coming up, because it can just change things and turn things around right like on the dime. So just make sure that we keep that in mind. So right now here, based on the technicals here, this is looking bullish. So especially if the price holds above this 1.1350 level. So if it holds above that level, then we are looking for a move higher. So we have to make sure it holds above here. Because if it starts to come back here, it can just basically do this trade in the range, which is what it's been doing for several weeks here. So now we are seeing a price move out of that range. So I would look for a pullback and a further move to the upside. So bias is bullish for euro dollar, and 1.1450 is the first target, and second target is 1.1550. So bullish bias for euro dollar for the upcoming week. Pound here, pound has also been doing good. So there have been some positive developments out of UK. So in regards to the whole Brexit, so we have Boris Johnson, if I'm saying it correct. He's the front runner right now for the prime minister position, and that is positive for the British pound because he's opposed to Brexit. So if he continues, or if things continue that way, we could see British pound go up further. So it has been creating positive sentiment for the pound. So right now, as we can see, we saw price close right into the top of that range. So prices, pound dollar has also been trading in the range for the last 5 weeks now. And as we can see, big push to the upside. Last time we were looking for a drop, it dropped a bit and then turned around. So now this is appearing bullish, but it is at the top of the range. So if it doesn't break through our 1.2760 level here, then it can come back and keep on trading in the range. But right now, because it's into the top of the range, if it breaks out, we're looking for a move to the upside, and we could see a move all the way into 1.3050. So for now, just keep in mind, it is trading in the range, but it could break out because it's at the very top. So bias is bullish right now. And first target is 1.2865. Second target is 1.3050. So bullish bias for pound dollar as well. Aussie dollar here, this one has also moved up, as we can see. So price did drop here and then turned around right into the support level. So right now, bias is bullish based on that. And I'm looking for price to go all the way up into the top of this range. So it's been trading, price has been trading in this range, and now it looks like it wants to go up. So bias is bullish. I would look for a pullback into 1.69 and then a further move to the upside. So in this case, bullish bias, first target 0.6950, second target 0.7020. So bullish bias for Aussie dollar as well. New Zealand dollar has also done really well here. Basically, US dollar just had really hard time this week. And as a result, we have seen everything go up against the US dollar. So here, bias is bullish again. We have a bullish candle close. This one has also been trading in this range. So if we were to remove these lines here, we can see for past several weeks here, 7-8 weeks, it's been trading in this range, hasn't really moved out of it. But as we saw, it traded in this range for quite some time here as well. So it looks like we have another range-bound move that's still going on. So in this case, we do have a bullish candle close here. I'm looking for price to move up further, basically towards the top of the range here. So bias is bullish. Just keep in mind that we are range bound, but looking for it to go towards the high of the range at 0.6680. So bullish bias for New Zealand dollar as well. Dollar CAD here, this one has dropped a lot. So we see that price went up and then got stuck into the support resistance. And since then, it has dropped. So this is where we are. So bias here is bearish. And I'm looking for price to drop further. Now, again, do keep in mind with all the US dollar crosses here, any developments in regards to the US will have an impact here. So this is what I'm looking for. Biases to the downside for dollar CAD. First target is basically the bottom here, 1.3150, and then looking at 1.3070. And depending on how much positive sentiment Canadian dollar picks up, if oil continues to go up, this will be basically positive for Canadian dollar. So dollar CAD could drop further. So this is what I'm looking for. Last target here is 1.2980. So bearish bias for dollar CAD. Euro pound here. This one has also gone up, but as we see, it is running into resistance right now. And because of that, we could see it drop. So for now, the bias is neutral. So we have a neutral candle here, and we have pins on both sides. So this one looks like it's rejecting that resistance here, and we could see it drop further. So basically, I'm looking for it to go retest the high, and if it doesn't break through, as we can see, there's this support resistance right here. If it doesn't break through, I will look for it to drop, and then it could potentially go down a little bit further into 0.8820. But right now, the bias is neutral because of this neutral candle close. So looking at the positive side, if it does make it through the high, it could continue on to the next level at 0.9050. So there is that option of it going higher as well. So bias is neutral right now. I have marked 2 levels, one on each side, and we'll have to see which way this wants to go. Euro Swiss franc here, we have seen a nice drop in Swiss crosses here. So we see bearish bias here for Euro Swiss franc. In terms of pullback, we could see a pullback into 1.1120 or maybe all the way into 1.1150. And then looking for a further drop here. Bias is bearish, so something like this is what I would look for. So first target would be basically the base of this week's candle, and then second target is 1.0980. So bearish bias here for Euro Swiss franc. Pound Swiss franc here, bias is to the downside. We had a nice drop and looking for a further move to the downside. Target here is, what do we have? 1.2280 into the bottom of this pin. So bearish bias. And in terms of the pullback, I like this 1.2480, and then looking for a further drop. So bias is bearish for pound Swiss franc. Dollar Swiss franc here, US dollar, like I said, really took a hit last week, and we have seen a huge drop here. So bias is bearish here, and we're looking for a further move to the downside. In this case, we could see a pullback, either a shallow pullback into 0.9800, or we could get a bigger pullback all the way into 0.9850. So I'd be open to both of these possibilities, but bias is bearish, and first target is 0.9720, and then we're looking at 0.9650. So it looks like, Greg, you may have missed my comments about the US dollar. It was essentially Fed coming out and opening the door for interest rate cuts. And there were some Fed members that basically said that they're looking for interest cuts right away. So market is pricing that in. Anytime there's interest rate cuts, it is negative for the currency. So that's what we are seeing for the US dollar here. All right, pound yen here, we see this is bullish. Price came into the support. It did drop from last week, but it came into support. And now we have a pin bar, a bullish pin bar here. So bias here is bullish, and this one could move all the way up. Now, as we can see, it's back into that support resistance level. So that's what I would look for. First target here is 138.50. So bullish bias for pound yen. If it goes beyond that, then the second target here would be 139.80. So bullish bias for pound yen. All the yen crosses have also turned around, like I said, because the equity markets are back into loving the risk. And when that happens, our safe haven currencies don't do that well. And that's why yen crosses will go in the other direction when the equity markets are so positive. So here as well, we see a bullish pin bar. Price came into the support and it has rejected the support. So this one could go higher as well. And as we can see, Euro yen has also been trading in this range here. So I will look for price to go into the high of the range. Target is 123.20. And if the positive sentiment continues for the equity markets, yen is likely to drop even further. And then the second target here is 124.20. So bullish bias for Euro yen. Dollar yen here, this one is bearish. Like I said, US dollar took a hit. And as a result, everything has dropped against or US has dropped against everything. So this is also bearish, looking for a pullback and then a further move to the downside. First target is 106.50. Second target is 106. So bearish bias. And in terms of the pullback, we could see a pullback into 107.80. So this is bearish here for dollar yen is bearish. Aussie yen, it's just been trading sideways here, hasn't really done a whole lot in either direction. We were looking for a drop last week. We got that, but we do see this rejection here. So in this case, there is this pin in the bottom. Now there is bearishness in the candle, so it could drop further, but if it rejects the bottom again, then I will look for price to come back towards the top of this range here, or top of this area that it's been trading into our resistance at 76. So I would say for this one, I will look for a retest of the low. If it rejects, I'm looking for a move to the upside, and target would be 76.00. New Zealand yen, this one hasn't done much either. As we can see, it's just been going sideways. So going to our weekly chart here, we saw a slight drop and then it's pulled back up. So in this case, again, if it rejects the low, I will look for it to retest the support here. So if it rejects the support, I'm looking for it to go back into the top here, and target is 72.20. So bullish bias for New Zealand yen as well. CAD yen has been basically doing the same thing here. We saw a drop and then price started moving higher. So in this case here, it's kind of sideways here for the last little while, for several weeks here. And now we're right into the middle of the range. So this one could go in either direction. But if it holds the support level, which is a good support level, as we can see all the way here. So if it holds above 80.50, then I would look for this one to go higher as well, towards 82.20 level perhaps. So bias is bullish here, back into the top here at 82.20, and if it goes through that, then 82.60. Bullish bias here for CAD yen. All right, so let's move on to our commodities here. We'll start off with our, Greg, I don't really cover Aussie CAD. I don't really trade it, but we can maybe look at it at the end there if you like. So let's take a look at commodities here. Gold has been bullish here. We have this bullish flag here, and it's been going up. So bias here is bullish, and it's gone through that support resistance level here, and now looking heavily bullish here. So next target here is 1433. So another thing to keep in mind, as US dollar drops, gold is priced in US dollar. So when US dollar drops, gold goes up as well. So bias here is bullish. Next target is 1433 here. And then beyond that, let me just go back. Okay, so we have 1420 first, 1433, and 1450. So bullish bias here for gold. Silver here, silver has been bullish here as well. It broke through this range. It had been holding in this range for a long time. It's broken through that, and we have a nice bullish candle close here. So this looks bullish as well. So bias is bullish. First target is 15.60, then 15.80. So bullish bias here for silver as well. Next one is oil. Oil has been bullish, as we can see. It has also broken out of this little range it was in. So this one's looking bullish right now. This is why Canadian dollar has been doing so well, because of the bullishness in oil. So with this one here, bias is bullish, and we could get a pullback into this level, but looking for it to go further. 60 or 59.80 is the first target. 63.80 is the second target. So this entire drop that we have, that could basically get filled again. So bullish bias here for gold. Copper here is also looking bullish. Oh, sorry, this is Bitcoin. Copper first. Copper is looking bullish here. That's the daily. So here we are. So copper here is bullish. Its next target here is 2.75. So bullish bias here. And in terms of the pullback, we could get a pullback into 2.65 and then a further move higher here. So something like that is what I'm looking for. So bullish bias here for copper. Bitcoin is pushing higher. Okay, so Bitcoin is pushing higher here. Like I said, I do not have the latest charts here. So please do refer to the latest charts. But just based on the weekly here, this is looking bullish. 10,600 will be the first target here. And then it could go all the way up here. 11,500. So we are looking bullish here for Bitcoin as well. All right, let's take a look at the equity markets here. Equity markets have been going gangbusters because of the Fed being dovish. So when Fed is dovish, when they talk about cutting interest rates, this is positive for stock markets, because that means that businesses can borrow money at lower interest rates, which means they will want to invest more in the business, hire more people, and so forth, which is exactly why Fed wants to cut rates. And that is good for the stock markets, which means more profits for the business and higher the stock prices. So this is what's going on currently. So bias is bullish here for S&P 500. We are right into the high, so just be careful with that one because it's the top. So next target is bullish here. 3,000 is the next target. So bias is bullish for S&P 500. NASDAQ here, this one is also looking bullish. We have seen a big move to the upside and looking for a further move higher here into 7860-ish level here. So bullish bias here for NASDAQ as well. And again, we would be at all-time highs. So when we are into these levels, sometimes we can see reversals. So just be careful. But DAX here, this is looking bullish as well. The weekly candle close is bullish. So I will look for it to retest this 12,500 level. And then next target is 12,600. So bullish bias here for DAX as well. FTSE has been kind of sideways here, as we can see. So price went into this level here, but it's not looking as strong. So this one could turn around. But if all the equity markets are doing well, they generally tend to move together. So we could see this one going higher as well. But based on purely the technicals here, looks like we could get a rejection if price goes and tests the high once again. I will look for price to drop and then maybe drop further here as well. So this is not looking as strong. There is bullishness in this candle still. So definitely there's room to go higher, but looking kind of weak here. The next target, if let's say there's more positive news about US-China trade negotiations and so forth, that will be positive for all equity markets across the board. So this one could move higher. But for now, I would say I'm neutral on FTSE, and we'll have to see which way first before getting too excited about this one. Nikkei here, Nikkei is the only one that actually has dropped here. So this is looking similar to what we saw with our FTSE here. So my bias here is neutral as well. This large pin on top, which suggests rejection, and we could see price drop. So keep that in mind. So right now I'm neutral on both FTSE and Nikkei. I think these ones we could see some move to the downside. So with this one, if it stays below the low, I think it could go test the high once again. If it stays below this support resistance level at 21,650, then I will look for it to drop, and it could also drop further. Now, having said that, just in general, right now, all markets, Forex, equities, everything is being impacted by external factors. US and China trade relations, US-Iran, and then we have Fed basically opening the gate for cutting rates. All of these external factors have a big impact on the markets, and things can change really, really quickly. The sentiment can turn around fairly quickly. So that's why it's very important in the current market environment that we pay attention to what's going on with these factors. So we have to keep an eye on our news feed. All right, so there were a couple of questions in regards to Aussie CAD first, and then Swiss franc yen. All right, let me open the charts here. I do not believe I have those charts, so let's see. Where's my market data? Okay, so Aussie CAD. If you find it, please let me know. Here we go. Okay, so let's take a look at the weekly here. That looks bearish, actually. You know what? Actually, overall, though, I think just from fundamentals perspective here as well, it's bearish, but we are into support, into strong level of support here. Now, if price does break through here, it could really take off. It could drop further here. So let's take a look at from fundamentals perspective. Bank of Canada has not cut rates yet, and they're not talking about cutting rates. On the other side, Reserve Bank of Australia has cut rates, and they are sort of dovish on their monetary policy stance. So from fundamental perspectives, Australian dollar is weaker than Canadian dollar. And in terms of the technicals here, we are still into this down cycle here. So this looks bearish. So we have a bearish move and a continuation here. Now, the biggest challenge will be the support level, because it is an important support level here. So price could face some problems going through the support, because last time it was here, it moved up. But as we can see, it has been making lower highs. So bias still is to the downside. But again, when we get into these important support resistance levels, usually there is a reaction. So watch out for that. But overall, the bias is to the downside. And next target here would be 89.80. So this one could drop further. But it is looking, from longer term perspective, this is looking bearish. Okay, so Swiss franc, Japanese yen, two currencies again. So when we are looking at these currencies, these pairs, this is how we want to look at it, right? First, we look at the big picture, and then we go down to smaller and smaller time frames. So we looked at fundamentals, and then we looked at the weekly, and then when you're trading, you want to go down further to daily and hourly and whatever else you trade. So just keep that in mind. So Swiss franc and Japanese yen. So what are the fundamentals about this pair? First of all, they're both risk averse or safe asset currencies. So when we see volatility in the market, or when we see risk aversion in the market, which we're not right now, we were previously last week, not this week. So if we see risk aversion where investors are scared, both of these currencies go up. And the thing is, they're both safe assets. So they tend to move in similar direction. They're both positive or negative from fundamental perspective. So let's take a look at their interrelationship right now. Not one that I trade, just because they are, like I said, they both tend to be bullish and bearish at the same time. Let's see. Okay, so from the weekly perspective here, actually, as we saw, all the Swiss franc crosses dropped and the yen crosses went up last week, right? So this makes sense. We see Swiss franc right now is stronger than Japanese yen, but it's sideways right now. Looks like it wants to break out of this range, so we have to wait for it to break out. It does look bullish right now. We could see a pullback into 109.60 perhaps, or a little bit lower into 109.50, and then next move to the upside here. So if it holds above that level, it could go up further, right? So if it holds above here, then I would look for it to go into the next level. So it looks like there's a ton of support resistance right now, or coming up here. So as long as it stays above 109.50, I think we can see it continue. And if it manages to break through this, then we could see another move to the upside. So it is looking bullish for now. And I think I have the correct one, right? Swiss franc, Japanese yen? Yes. Okay, any other questions? Pound New Zealand. All right. Let's see, Pound New Zealand, I should have a chart for. Where is it? Pound New Zealand, here we go. From the daily perspective, it's trading in a range. You know what, I've moved away. I used to use indicators. I have moved away from them, just because I think if we just wait on indicators, then then we're not really paying attention to what's going on around us. It's like having that indicator to change lanes. I mean, not to change lanes, but that. So on my car, I have this beep that comes when I get too close to the to my lane, the line, or if another car is too close to me. So see, the problem is if you rely on those type of things, then we are not aware. Then we stop focusing on really what's going on around us. So I think it's nice to have so indicators are like that in the Forex market. So yeah, it's there. I mean, I'm not opposed to indicators. It's just that I find I was becoming a little too reliant on them and not thinking for myself. So that's why, a long time ago, I got rid of most of the indicators here. So I like to see, it forces me to focus or pay attention to what's going on in the market and also what the price is doing. So focus on price action. Okay, so here, pound New Zealand, it looks like it's rejecting the low here, but it is coming into this resistance level at 1.9450. So right now we have a doji. So this one could be bullish here, and we could see this one go further up. But another thing to keep in mind for any kind of pound crosses is what's going on in regards to the Brexit and in regards to the politics in UK, because that will play a big role in how pound does. So keep that in view here as well. But this one does not look too exciting from the weekly perspective. It is trading in a range, so I would go to a daily and watch it here. So as we can see from daily perspective, it's been trading in a range. It's still in the middle of the range. So right now, I will look for it to go towards 1.9420, towards the top of the range. If it doesn't break through, then as range-bound moves do, we are likely to see it come back down. So for now, though, there is room for bullishness here towards the top of the range. I would look at that first. If it breaks through, then we have this room to the upside and it could go higher. So in this case, the next target beyond the 1.9420 would be 1.9550. So those will be the two targets here. But if it doesn't break the range, the top of the range, then very likely that it would come back into the middle of the range again. All right, so I think we got the questions covered. All right, so one last thing before we wrap it up here. If you guys like the analysis that we do on a weekly basis, I do similar analysis on a daily basis as well. So you can join me on the trade vault. So, I send out the weekly levels, the target levels, and the market direction in a spreadsheet as well. So for the trade vault, I do the same thing. So every week or every day, we have a live daily market analysis Monday to Thursday. So we start off by preparing the weekly, and then we go into the daily. So every day we want to get closer to price and look at what's going on from the daily perspective. So that's what we do in the daily market analysis call, and you will receive a daily market forecast spreadsheet. So that's our watch list. So those are, it will show you the direction that I'm looking for the pair to go. It also shows you the pullback levels that I'm looking at, and it will show you where my targets are for each pair on a daily basis. And then basically during that, we cover about 20 plus Forex pairs. There are additional pairs that we cover during that analysis. So we look at all the Euro Aussie, Pound Aussie, Euro New Zealand, Pound New Zealand, and the CAD pairs as well. So we look at those crosses as well. And the idea is that you can choose the one that you like to trade. And of course, I will give you the pullback levels, which are my potential entry levels, and the profit target levels that I'm looking for each pair that we analyze. And of course, the last one is you'll get access to a private Facebook group. This is where I'll be posting my live market commentary. So when President Trump tweets and says that US and China are going to start talks there again, I will basically tell you what that means in regards to, or my opinion of what that means in regards to what impact it will have on our trading. So little things like that, which cannot really, it's hard to cover at any other point because they happen in the moment during live trading. So I will put those comments in there as well. And of course, you will have access like this to me where you can ask me questions, and we can look at whatever pair. And my focus always is to make sure you guys are learning. All right, so to join the daily market analysis call, you can go to this link. It's on bit.ly, Trade Vault. So this is the link, that you are looking at. I will post it let me post it in the chat here so you guys can access it. But this is basically the same format that we have here. We do on a daily basis. And with that, I will wrap it up. You guys have a wonderful rest of the weekend and a great trading week. Make sure you keep an eye on the news and comments that come out. And that's it. So have a wonderful rest of the weekend, and I'll see you again next week. Bye for now.